Guys, Palantir is up over 11% after hours. And here are my thoughts on the earnings that caused this big skyrocket, 11.6% after hours. Okay, so here's what they reported. So their expected to make 8 cents per share came right in line on that very conveniently. And their revenue beat, they reported $608 million in revenue versus 602 that was expected. That is 18% growth in their revenue. Now, they're up 11.5%. Guys, now Palantir is a $39 billion market cap. But what I love about them right here, guys, is look at this enterprise value, $36 billion. This difference, when enterprise value is lower than market cap, it means they have more cash on hand than they have debt. So this company essentially has zero debt. They have negative debt. They have more cash on hand than that. It is very difficult for a business to go out of business when that's the case. Doesn't mean it's impossible, but this is awesome news. Now, if you scroll up here a little bit, here's something interesting on Palantir. I like to focus on their free cash flow. Their free cash flow in the last year, not including the quarter they just reported, was $475 million. But on that, they only reported income of $147 million. Free cash flow greater than their net income. We prefer to see that than the other way around. Why? It's easier to manipulate that net income number with all these accounting rules and depreciation, blah, 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 versus free cash flow is cash from your operations, less your capital expenditures. It's a much harder number to manipulate. So I like the fact that their 1 year and 5 year average free cash flow is greater than their 1 year and 5 year net income. So positives there. Palantir, they're all about the data. They're all about all that stuff. They've been around for 18 or 19 years. They're growing. Now, there are some issues with Palantir. We'll get to that shortly. But overall, I mean, their growth is very, very impressive. I'm actually surprised at that 18% growth number. I would have thought much higher than that. So they did last year 508. So 608 in revenue versus last year's fourth quarter right here of 508. That's essentially 19 or 20%. That's a big jump, guys. Versus the previous year was actually a higher growth in the previous 1 year, the previous December versus last year's December. So some good things happening there. Great balance sheet. Let's check out their 8 pillars. Oh, wow, they're up almost 13% now. So this is their 8 pillars. Now remember, guys, the reason I like seeing this is I want to explain to people, stock can still be a buy even with a lot of X's here, okay? A lot of X's here. Now, we don't have enough data in a few of these to really answer here because of their negative free cash flow. But you look here and go, okay, revenue is growing, cash flow is growing, net income is growing. And here's another thing, guys. Net income is up $780 million in the last 5 years. Cash flow is up $940 million in the last 5 years. So a greater increase. So guys, here's Palantir's 8K, and here's some highlights from Q4. One, net income by GAAP, generally accepted accounting principles, of $93 million, representing a 15% margin, which is the 5th consecutive quarter of GAAP profitability. GAAP income from operations, $66 million, 4th consecutive quarter. Now, GAAP earnings per share of 4 cents per share, adjusted EPS of 8 cents a share. This is the one we were expected to go. Revenue grew 20% year over year and 9% quarter over quarter. So fourth quarter versus third quarter was a 9% increase. Good stuff. Now, U.S. commercial revenue grew 70% year over year and 12% quarter to quarter. U.S. commercial customer count grew 55% year over year. What this means is the revenue grew 70%, but the count grew 55%. That means that they grew more per client, it seems, than they did the number of clients, which is a good thing. I don't think it's a bad thing. I kind of like seeing all that. Total contract value of $343 million, representing 100% growth year over year. That's incredible. Wow. Commercial revenue grew. Customer count grew 35% year over year. So customer count grew 35% year over year. And we talked here about the revenue growing about 18 or 20%. So it shows, and they talked about this before, they wanted to have more customer growth as opposed to per customer revenue. Because before they were doing all these big contracts. Now they're like, listen, we want to grow. We're willing to take smaller contracts. And that's showing here with the number of customers that grew versus the revenue that grew with it, okay? Because you have less revenue in dollars growth versus number of customers, okay? Now, for all of 2023 highlights, overall, revenue grew 17% to $2.23 billion. Commercial revenue grew 20% year over year. Government revenue 14% year over year. And adjusted free cash flow, $731 million, which is a margin of 33%. So if you have our software and use a stock analyzer tool, that's 33% free cash flow margin. Guys, if you've seen our past videos, the issue that we have with Palantir is that their earnings per share tends to hit just what it needs to hit. The funny part is that just gives me an uneasy feeling in my stomach when I see how they did it, but their free cash flow number is incredible. I look at it going, guys, you have a free cash flow number that's incredible. Don't even worry about the EPS, but I get it. People in the markets want to see net income and all this stuff. I get that, but your free cash flow number is insanely good. Insanely good. Just focus on that. Just focus on that, which absolutely boggles my mind that everybody makes a big stink about it. So, what is Palantir worth? Well, guys, that's the thing we always talk about. What we need to figure out here is what are we willing to pay for Palantir? Now, I'm going to pull it up in our stock analyzer tool when I did it last. So here is my 10-year analysis on my stock analyzer tool that I did in the past. Revenue growth. I did 8, 16, and 24. Okay, it seems like 16, come on. Well, we did 18% recently, so is 16% reasonable? We're going to go faster, slower? I don't know. But I like to sit there and say, let's give a wide range. And guess what, guys? It's okay if you're using stock analyzer tool to have a wide range on such small companies because you don't know where they're going to go. They could grow astronomically. They could grow less. They could go to zero. These are smaller companies, which is kind of a weird thing to say about a company with a market cap of $39 billion. Now with profit margin, this is where I have to kind of guess. You're sitting here going 10, 20, and 30%. That's what I did here. Now for free cash flow, remember what I just said. Their free cash flow last year was a 33% margin. I had 15, 25, and 35 in here. Is that too low? Because they just did 33% last year. And their gross margin is something like 80-some%. Should this free cash flow margin be higher? I don't know, but what I will say is I might adjust these profit margins and free cash flow margins accordingly. So on profit margin, I might go 15, 25, and 35. But for free cash flow, I might do 20, 30, and 40%. So I'm driving up my high end a little bit. And actually, all three levels I'm driving up. But the interesting part is this 40% isn't some insane number compared to what they did last year. Last year, they did 33% on only $2.3 billion in revenue. This is a data business. I got to think they can probably hold these huge margins there. Now, what PE do we think this company is going to sell for? Guys, in the time we've made this video, the stock opened up 9%, went to 15%, and now it's up 10.5%. Who knows what's going to look like in the morning when this video comes out? But look here on PE and price to free cash flow. I put 15, 20, and 25 times. Guys, it's a fast-growing business, but this is for 10 years from now. We have our 10 years of analysis here. What's the PE at 10 years? I'm putting it at 15, 20, 25. This is the art of investing. We don't know what it's going to be. We don't know what a reasonable number is going to be. Are they going to be the absolute leader in that business with a huge moat, untouchable? Are they going to be one of many companies? I have no idea. So you have to just make your estimates, put a wide range. Intrinsic value isn't some immediate exact dot. It's kind of like Warren Buffett talks about it this way. If you go to a carnival, you have those guess your weight kind of games. If I looked at you and said 500 pounds, you don't need to know my exact weight to say, nope, that's not 500 pounds. But if I said to you, if you looked at me and I said 175, take the over or under, you might be like, I don't know. Could he be 170? That's the thing. Intrinsic value is just like, listen, it's either obvious or it's not. It's not about getting an exact dot. It's about sitting there saying, this seems right. Now, what I usually do is I put some margin of safety here, but here I put my desired return just at the market. I've been doing that a lot lately to let you determine your margin of safety. So this is my 9% market return. I hit the analyze button. And guys, before we get into that, if you like our software, if you've heard about our community, we have a free 7-day trial, everythingmoney.com. Go try it out. Free full access for 7 days. Full access. Everythingmoney.com. Hit the analyze button. Boom. So guys, here's the hard part. We got a low price of $3 or $4, high price of 35 to 40, a middle price of 11 to 13. Now again, if you pay today's price of $19, it's about a 6.5% return based on free cash flow. Do what you want with this, guys, but to me, it just feels like I'm going to wait a little bit on this one. It could end up being the biggest blockbuster of all time, and I missed out, but it doesn't hit my criteria. Everythingmoney.com, 7-day free trial. Thank you for your time.